Welcome back to the Traders Network. I'm Michael Yorba, your host. Thanks for joining us. We're also streaming to you live on yorbamedia.com and broadcasting to you from the Dallas KFXR 1190 AM Clear Channel Studios. All right, on the show now, Nick Santiago, President, CEO in the Money Stocks. Nick, welcome back.
Great to be back, Michael. Thank you for having me.
My pleasure. Before we get into the litany of stocks, how did the trading room go today?
Another good day in the trading room. We caught a few nice morning scalps, caught the nice little reversal on the low today, and it was a pretty good, solid day. I tell you, traders got to come over and check it out. They got to give it a try.
Just another day in the life, right?
That's just another day at the office, Michael.
All right, UAL, what do we got going there?
Yeah, UAL I wanted to bring up today because it's one of the airline stocks that have been severely lagging. As you know, oil prices have been creeping higher in stealth form, so that's definitely a little negative. Today, UAL is making a little bit of a move, but I think traders should watch the $40 level on UAL. That's your buy area. Don't jump in this one beforehand. If you notice the pattern on the daily chart, it's really forming a sideways base in a bearish manner. So this wants to go down and test $40. I think 40 is where you're going to have your big support level. That's where traders could own UAL. And, possibly it could be even a longer-term play depending on how the market reacts. But UAL at 40 looks very attractive.
Okay. All right. And then we have Costco, my aunt's favorite store.
Yeah, my wife's as well. Costco is one that I brought to your attention about 2 weeks ago, and I said to your listeners to buy Costco at 110. It got a little bit lower than that. It got to 109.50 on February 4th. And now I think traders should look for the 117.50 level, and that's where they should really look to exit the entire position. Maybe you get 118, but you don't want to get greedy on this. But it's had a great bounce from the 110 area. Today it's trading at 115.72. I received at least 24 emails from your listeners saying, hey, I heard you on Yorba Radio, and thanks for that trade. Where do I get out? So I'm just trying to give them a little spot to take profits.
All right. I'm glad. And by the way, listeners, thank you very much for participating. All right. Amazon, what do you got there?
Yeah, Amazon is one I'm watching pretty closely as a potential short. Now, right now, the stock, as you can see, a couple weeks ago had earnings earlier in the month. Right now, it's rebounding up a little bit. So we're going to watch for pattern on the weekly chart. But ultimately, I have this stock penciled in the way it's come off the highs to go down to around 300. I think 300 would be a real good buy area. That's the only spot I'm going to get involved in the name. But if I get a bearish pattern here on a bigger time frame, I will look to short the equity down to that level. I just don't have that pattern completed yet.
Yeah, that would be a great trade. All right, fantastic trade. Looks like LinkedIn.
Yeah, I wanted to bring up LinkedIn today. This stock has really been an underperformer. Even today, it's down about 63 cents. Tested 190. I think traders could look for a bounce in LinkedIn around 184. It could go as low as 181, so put your stop below 180. But right now I'm thinking 184 is the bounce level for LinkedIn. That's where I will be getting involved in the equity.
Okay, all right. Now, here's the question I've got for you, because on a weekly basis, this thing just broke the 50-period moving average. When you say you're going to get involved and you're looking for a bounce, are you looking to short the end of the bounce, or are you looking to buy the dip?
No, I'm just buying the dip. I'm not looking to short LinkedIn down here at these levels because this stock's so oversold. That would be chasing, and you could get short-term rallies at any point. But the solid level that I'm seeing on the chart is between 84 and 81. That's a level to get back involved in LinkedIn, and then you can make a move back to 210, 225.
Okay, now that is some information. Okay, all right. Let's move on to General Motors.
Yeah, I want to talk about General Motors simply for the fact that the company has been coming out with all sorts of numbers, and I could care less about any of that stuff. I don't care about auto sales. I don't really care about any of the fundamentals at all. What I care about is where would the institutions come back in and support this stock for a bounce, and the level is $33. So when General Motors gets back down to 33, that's a level to get in. Do not buy General Motors before you got 2 more points of downside. Then you could look to get back in the stock. And you probably could see from 33 a move back towards 37.
Okay. All right. JP Morgan, let's walk there.
Well, JP Morgan is, kind of my barometer. I have strength in the stock right now, or the momentum in the stock right now, is telling me that the stock will trade back up to around $59. Around 59, though, that's where it's going to hit a wall. So there's a little bit more upside. We probably got another point or so, a little bit less of upside in JP Morgan. That's where this stock really should stall out.
Okay. All right. The S&P market is, we've had a lot of people saying, and I know that you've already said, look, you're bearish 2014 as a whole on the stock market. Mm-hmm. Short term, we've got a little rally going on. Give me some resistance areas and what your thoughts are on the market.
Well, right now, the resistance level would be just a hair above double top at the moment. You're probably looking at around 1855, 1854, somewhere around there. That will be the next major resistance level. It's more about time than price. Time is always more important than price, in my opinion. But we've had a real good bounce in the S&P. In fact, we went long at around when the S&P was down around 1740. So, I mean, we have a bunch of long plays. I believe we had, over 9 long plays put out at that time point. So they've all worked out very, very well and just about in the money on every single play. So right now I'm looking for a little bit more upside. We'll see how it looks when we get to around the 1855 level.
Okay. Are you watching the U.S. dollar with any intent or interest?
Believe it or not, I'm not really following the dollar all that closely at the moment, but what I am following is the dollar yen.
Okay.
And the dollar yen is the market. It's the actual stock market, because all the financial institutions that are highly leveraged, they're short Japanese yen, meaning they're long the dollar yen. So when the dollar yen pulls back, and if you want to overlay a chart of the S&P 500 with the dollar yen chart on any time frame since late 2012, you're going to see that the two charts basically mimic each other in virtual lockstep. So the dollar yen chart is the most important chart that any trader could follow at this moment.
Okay, now that being said, tell us what you think is happening with that. There's some numbers. Throw some of those out for us.
Well, when I look at the dollar yen chart right now, we did have a pretty good sell-off from the beginning of the year, and that was expected. That was part of the thesis for negative January and a negative 2014 overall. Now it's going to be all about the pattern, along with the S&P, because the S&P and the dollar yen chart are virtually the same. So it will be we'll have to look at what kind of pattern is formed over the next 2 to 3 weeks, and we'll make a real gut-wrenching decision there. But it's going to be a pivotal time.
Okay, we got about 3 minutes, so there's time. Have you been looking at the energies or the financials? Anything over there?
Well, I look at both all the time. In fact, I'm always looking at the nat gas stocks. I'm always looking at the integrated energy plays like ExxonMobil, Chevron, ConocoPhillips. Right now, I'm looking at Exxon, and Exxon has had a little bit of a bounce, but I think this stock could go back and test $88. That's not too far from here. Stock's trading at 91. But when it tests $88, that's going to be a real tell for the energy market, how it reacts at that level. Does it make a bearish pattern? If it does, then ultimately energy stocks are going to go a lot lower, and ExxonMobil could test $76. And while that doesn't sound like a giant move, it moves the rest of the energy complex, because Exxon is basically the JP Morgan of the energy stocks.
Okay. What are your thoughts? We got about 2 minutes left. What are your thoughts on the bond market right now? I mean, we've got a new Fed chairman in there. They said that, there's nothing changed here, but we're getting some movement on the bond market.
Yeah, right now we're basically in a range. The 10-year U.S. Treasury yield, and that's what I really follow more than bond prices themselves. I like to follow the yield chart. It seems to be much more accurate, in my opinion. Right now we're between 3% and 2.6%. I think that depending on what happens, and if the stock market starts to plunge, bond prices can go up and yields could go lower. But until the 2.59% level on the 10-year U.S. Treasury yield is taken out with conviction, we're just going to be stuck in a range here of about 40 basis points or so.
Okay. All right. We're about out of time. Please, contact information, and if you have any events coming up, everybody can participate.
Yeah, we do have an event coming up shortly. You can see it on our website. It'll be, I believe, next Saturday. And my partner is holding that webinar, and it's called Keys to Unlimited Success, and he's going to show you all of his technical strategies. So that's a big one. Come on over for that. and just contact us at inthemoneystocks.com. We put tons of free content up there, Michael, each and every day, and I put out a video every morning, and I give trade setups each and every day, complimentary. And for people not taking advantage of it sometimes, I just can't believe that they don't watch it. It's only about 10 minutes long, but you may get 2, 3, sometimes 5 trade setups a day in that video.
All right. Thanks for keeping us on the right side of the market, and keep up the good work, Nick.
Thank you for having me, Michael. Have a great day.
You too. Nick Santiago, President and CEO, InTheMoneyStocks.com. And I want to put a special thank you out to our listening audience for participating with the show. When Nick tells me that you guys are contacting him about the trades that he's putting on, that just makes my day. Big thank you out. All right. Coming up next, Tim Boss.